Let's talk about the currency markets where the rupee has seen a lot of strength coming in today, more than 0.5% of a gain coming in on your screens. It has been a choppy day, but we have managed to end below 62, which is a 3-week highs coming in for the currency. The strength has come back because of the strong equity markets, and you also have seen most of the emerging market currencies doing better, and that's the reaction you have seen coming in for the rupee. Vijay, what's your sense, first of all, on the currency, the Indian rupee?
Manisha, the rupee is appreciated and gone to a level, or nearly gone to a level which we've talked about, 61.60, 61.70 kind of levels. At that point in time, I would expect a short-term corrective rally or a bounce in the USD. I think from 61.80, if it was to bounce, it would very clearly possibly go to 62.20 odd levels. Once that bounce is done, or if that bounce does not really materialize, the appreciation potential then opens up to 60.80 odd levels. That's where I would be very clearly more interested in buying the USD INR, because at that point in time, the USD would have been subdued vis-a-vis the INR for a fairly long period of time, and the time-wise correction would be near ripe enough for a technical bounce on the USD. So I still would maintain my buy on dips outlook on the USD INR.
Let's also get on board Ashutosh Khajuria, who's President, Treasury Federal Bank, and also joining us is Mr. A.V. Rajwade, Director A.V. Rajwade and Company, for their take on the currency. Mr. Rajwade, to you first, and the currency really has turned around quite strongly today. We are looking at a breach of 62 on the levels there. How are you reading, first of all the economic data and the reaction on the currency? And what's your sense ahead of the vote of account on Monday? Is it a, preempt action ahead of that?
No, not really. I mean, I can't see that the vote on account is going to make any material difference. I think what we have seen is that headline inflation rates, both CPI and WPI, have come down, but core inflation hasn't. And to an extent, of course, this is a seasonal impact. Vegetable prices primarily seem to have driven down inflation. I think it remains to be seen how long this will last or continue. Meantime, the latest data suggests that there's been hardly any export growth. The trade deficit has narrowed a bit, a little below $10 billion, but it's primarily once again because of gold imports coming down. I think that's a result of two different phenomena. One is that the global prices have come down, which obviously reduces the import bill for official imports of gold. And number two, I think the World Gold Council recently estimated that in 2013, total Indian imports were in tonnage terms not very different from in 2012. Something like their estimate is 750 tons. I'm talking of calendar 2013 in official imports, and their estimate is about 200 tons of gold getting smuggled in. But smuggled gold also has to be paid for in dollars, and somewhere I think that impact will come in as we go along. I think there are a couple of other major question marks before us for the next, I think, say 2 or 3 months. Number one, of course, and foremost is election uncertainties. Who will be in power? What kind of policies they would follow? So I think that's one big question mark. Second is whether the uncertainties might frighten sort of FIIs, money may not come in, and I think that's a possibility that cannot be overlooked. I think fiscal deficit now seems to be, with the auction fetching much more than what the government was looking at, and I think some postponement of committed expenditure and so on, we should see the number getting met. So probably I think it all depends on to what extent RBI would support the rupee, that is sell dollars from the reserves. I think it's an interesting factor is that reserves have not gone up anywhere near the FCNR swaps which the RBI did.
Yes.
So it looks like directly or indirectly they are supporting the exchange rate.
Well, Ashutosh, let's get a conversation from you also going. What is your expectation then on the RBI action in April with all the data that we have seen this week?
I think if the numbers consistently go below 9% and move towards 8 and all, I think there could be a remote possibility of us taking a policy action, but that probability is lower. I think the higher probability for status quo as on 1st of April. Of course, I think these numbers suggest that the hardening of rates, which he himself said that he's done with, is reconfirmed, and I think it's validated with these sets of numbers.
Ashutosh, also would you say that India within emerging markets seems a better place with the kind of rupee movement that we have seen?
Certainly yes. Certainly yes. I think after $20 billion being brought down from $85 billion a month to 65 in 2 tranches, and we could withstand that, tapering. Rupee did move towards 63.5 or so, but was, comfortably brought back.
Let me read out that really has come onto the wires yesterday, and that has been that the savings of the European Union's 500 million citizens could be used to fund long-term investors to boost the economy and help plug the gap left by banks since the financial crisis, as EU document says. Vijay, what is your first reaction to this? That really tells us that the European Union concerns really are not out of the woods.
Absolutely, Manisha. That the European governments want to dip into the savings of its citizens to fund their gaping holes in their balance sheets is indicating that the cash crunch is actually fairly severe. And the optimism that we are seeing in the markets needs to be tapered marginally. Of course, this game plan, which has been elaborated in the Reuters report, talks about a time frame of 24 months over which this could possibly be put in place, if at all. So it's not something that's going to happen tomorrow morning, but the fact that it's being considered is leading us to the view that things are still severe and we are not completely out of the woods yet. So there will be further turmoil. And the words that I have been using about is pro-cyclicality. I think we are still not out of the pro-cyclicality and deleveraging threat here.
Mr. Rajwade, what's your sense on that? And also the Indian elections, the European Union still looking at some problems, and the US jobs data, or rather even the retail sale numbers, not really up to the mark.
That's true. I think even the IIP numbers have been very disappointing. The latest number which came 2 days back. As far as the European Union concerned, I would agree with the comment that have been made. I think it would come back into power. I think one other come back into headlines. I think one major issue is also going to be immigration. And hello?
Yes, we can hear you, Mr. Rajwade.
Hello?
We can hear you, Mr. Rajwade.
You can hear me now. One major issue is, okay, one major issue I think is going to be immigration. Between countries now from 1st January, all restrictions on intra-EU movement have been removed. Already Britain is creating some problems on that. So I think there are a number of question marks on that whether we are completely out of the woods. But I think some stability in the near term, but I think we can't rule out a major turmoil later in the year.
Okay, so while we are looking at some appreciation and stability in the near term, the longer term is still quite uncertain, is the view coming in from our expert. Thank you so much, Mr. Rajwade, for joining us. Ditto to you, Vijay. Also, Ashutosh, thank you for giving us your sense on the currency markets.